Welcome to the Keiser Report. I'm Max Keiser. You know, in 2003, according to Buckingham Palace officials, the royal household cost each taxpayer in the UK about one loaf of bread. In 2004, that cost was just under 2 pints of milk. And in 2009, a mere mp3 download. That certainly sounds much better than telling the taxpayer the Queen cost them £41 million annually to maintain. Meanwhile, across the pond, Goldman Sachs' role in the aluminum market has cost the consumer $5 billion over the past 3 years. Or, if, as the royal Goldman household would have you believe, that's a mere 0.002 cents per can of soda pop, or just $12 per automobile. Not much when you look at it that way. Besides, think of all the tourist money the royal families of Wall Street bring in. Now, to explain all this in greater detail, we turn to Stacey Herbert.
First, Max, this is going to be a controversial episode because we're going to talk about Goldman Sachs and the aluminum market. The British people, of course, call it aluminium, so there are going to be hundreds of comments saying they pronounce it wrong.
I thought you were going to say Goldman Sachs and the Illuminati. No, it's the aluminum, or as the British people say, aluminium.
Yes, the British say aluminium, but it's aluminum. Anyway, so as of 2003, you know, all the banks on Wall Street looked at what happened to Enron. They were able to coin it, basically rigging energy markets. And as of 2003, the Federal Reserve and Congress allowed banks to get into that, basically into the commodities market, the physical commodities market, delivering energy. We saw JP Morgan just this past week being fined $500 million for rigging the energy markets, exactly in the same way that Enron did, by the way. And now we have this New York Times piece covering the aluminum market. So in 2010, Goldman Sachs bought Metro International, which has 27 warehouses in Detroit. And here's their story. A shuffle of aluminum, but to banks, pure gold. The story of how this works, how they're able to add $5 billion to the cost over 3 years to Aluminum Max, begins at 27 industrial warehouses in the Detroit area where a Goldman subsidiary stores customers' aluminum. Each day, a fleet of trucks shuffles 1,500-pound bars of the metal among the warehouses. 2 or 3 times a day, sometimes more, the drivers make the same circuits. They load in one warehouse, they unload in another, and then they do it again. So since buying this, the average delivery time for your aluminum has gone from 6 weeks to now 18 months because of Goldman Sachs adding the cost. Before you speak, Max, Goldman Sachs has replied to this New York Times piece, and they say they're just being
market makers? How would I ever guess that? Well, this is fantastic because it's low-frequency trading as opposed to high-frequency trading. You know, high-frequency trading, Goldman will put a computer next to the New York Stock Exchange, they'll front-run trades, and they'll siphon off cash, and they leach out money, and they are destroying the American economy that way. Here in Detroit, it's low-frequency trading. They put a warehouse next to the city of Detroit. They leach out all the money from Detroit. Now that entire city is in receivership. Now the entire city of Detroit's going bankrupt because folks like Goldman have set up shop next door in these huge warehouses to leach money out every single day, a penny, a fraction of a penny at a time. They leach it out like a cancer cell, just leaching that money out. There's Lloyd Blankfein leaching, the enormous leech on he's the pox on the American soul. He's just leaching all that money out. And of course he claims market making, which is false. Anytime Lloyd Blankfein uses the phrase market making, substitute fraud, F-R-A-U-D, fraud. It's fraud. It's not market making. I know because I invented market making technologies that could have been used to create markets that did not have predatory cancerous cells like Lloyd Blankfein. But unfortunately, that technology is being warehoused by another Wall Street firm. But this is not market making. That is false.
So the Metro officials, a subsidiary of Goldman Sachs, are saying they're responding to market forces, and that's why it now takes 18 months to get delivery. Now, the price of aluminum is now reflecting the 18 months it takes to deliver your aluminum. This is these facilities in Detroit that Goldman owns represent 25% of the aluminum storage market, and there's 1.5 million tons of aluminum there. But now, it's the London Metals Exchange which regulates it. And the London Metals Exchange collects 1% of all of Goldman Sachs' rent that they're able to charge their clients. So these are the costs that this whole charade, this whole dance of lifting these huge bars of aluminum, which you could see in the photo from the New York Times, and moving it from warehouse to warehouse to warehouse. And this is the height of capitalism. This is what capitalism has become, is this just moving for nothing. It's exactly like what Soviet Union did.
Yeah, no, there's a parallel to the Soviet Union times for sure, that the state would demand certain deliveries be made regardless of the market conditions, and of course that collapsed. And America will collapse just like the Soviet Union did. But when Lloyd Blankfein talks about market making, what he really means is financialization. And what financialization means is that you take a market that's working fine, and you add another market on top of it, and then another market on top of that. Some would call that derivatives. You put an option on top of an option contract, or you put a warehouse next to an aluminum delivery facility to make a market, according to Lloyd Blankfein, but to add another layer. You get the CME taking their cut, the Goldman takes their cut, everyone in between takes their cut. Inflation ends up in the prices for the day-to-day of the average person, but that's offset to some degree because they're getting some stuff made by slaves in China for garments, et cetera. So you don't see it showing up in the CPI right away. But financialization is creating the wealth and income gap in America, which is causing social unrest and is causing pre-revolutionary kind of unrest in America. But Lloyd Blankfein is the guy, or Jamie Dimon, to point to, who are creating this unnecessary financialization.
So now remember, Enron used to be an energy services company, and what they decided to do is that there was no money in that. They are the first ones to financialize the energy markets.
Right, they use special purpose entity accounts, 700 or more, with comical names like Chuco, to hide massive debts off the balance sheet. Where's JP Morgan and Jamie Dimon in all this? Oh, they have $90 trillion off the balance sheet in derivatives. So they are Enron times 100. That's why I say Enron and JP Morgan are going in the same direction. They're going to zero. JP Morgan stock will be zero at some point. I'm willing to bet anything on that happening within the next 5 years.
Well, Ken Lay at Enron just determined that trading derivatives was actually more profitable because they can just clearly scam everybody.
Financialization.
Yeah. So here we have, the banks saw that, and they didn't do anything to help stop it. They said, we want in on that business. So in 2003, using special exemptions granted by the Federal Reserve Bank and relaxed regulations approved by Congress, the banks have bought huge swathes of infrastructure used to store commodities and deliver them to consumers, from pipelines and refineries in Oklahoma, Louisiana, and Texas. And by the way, how many problems have we had with WTI because of exactly these guys? The pipes don't work, the pipelines don't work, things aren't delivered, nobody knows how to trust WTI anymore, to fleets of more than 100 double-hulled oil tankers at sea around the globe, to companies that control operations at major ports like Oakland, California, and Seattle.
Right, well, the main purpose of the crash of 2008 was to get rid of a lot of competition for Goldman and Jamie Dimon and JP Morgan. So they got rid of Bear Stearns, they got rid of Lehman Brothers, and they absorbed Wachovia. Too big to fail banks got even bigger, and that's one of the points that whole financial engineered collapse occurred in 2008. So now what you're describing here is Morgan Stanley, Goldman, and Jamie Dimon at JP Morgan have an oligopoly position. They collude. Means they're engaged in open price fixing. There's no competition. There's no way to someone to come in there and say, you know what, we're going to offer a cheaper service and do this competitively, because they'll be forced out of the market because the regulators are in the pockets of the bankers.
Well, you know that there's a case going on against Fabrice Torre from former Goldman Sachs about these subprime mortgages that were dumped into collateralized debt obligations and sold to passive pension funds around the world. And we know that Goldman Sachs and their preferred clients were able to profit knowing that these things would blow up, knowing that Greece would blow up. The same thing here is they control 25% of this market, the storage market. So because the price of storage is baked into the aluminum cake, then they are able to know whether the prices are going to rise or fall. They could easily make it faster delivery so that they know that the price will collapse. But now the article then goes on to note that by controlling warehouses, pipelines, and ports, banks gain valuable market intelligence, investment analysts say. That in turn can give them an edge when trading commodities. In the stock market, such an arrangement might be seen as a conflict of interest or even insider trading. But in the commodities market, it is perfectly legal.
It is insider trading. It's overtly insider trading. And of course, they also have the ability to create indexes around this inside information and data that they then manipulate with another layer of financialization. So all the commodities they'll go create 5 or 10 or 15 new indexes based on the components of these commodity markets that they're manipulating, and then introduce contracts that are based on these indexes that they are manipulating. And of course, all that ends up being thrown into pension accounts. One reason why Detroit has to go bankrupt is because Goldman and JP Morgan have dumped hundreds of billions of dollars worth of toxic securities that they've been trading into the pension accounts of the people of Detroit. Then they're, instead of saying we have to write down those assets because we committed fraud, instead they're going to put that entire city into receivership and hope nobody ever digs into the pension accounts and say, wait a minute, JP Morgan committed fraud, Goldman Sachs committed fraud, Morgan Stanley committed fraud. They're going to, it's like America's policy in Vietnam. Just kill everybody. Just kill everybody and hope nobody looks for the dead bodies.
Well, back to this story, because the Federal Reserve Bank is looking into this because they're the ones that approved it. And one of the reasons why they said for giving the banks the ability to do this is that they would provide efficiency and market making and liquidity. But here we see that before, whoever owned this before, without Goldman Sachs involvement, was able to deliver their aluminum in 6 weeks. Now it takes 18 months. Now, put this into context of what's about to happen. The two primary things in the world of metals, copper, in the agricultural world, wheat. Those are the two things that even the US doesn't allow to be tampered with because those are so basic to the fundamentals of everything about our fabric of our lives. Well, after a sustained lobbying effort, the Securities and Exchange Commission late last year approved a plan that will allow JP Morgan Chase, Goldman Sachs, and BlackRock to buy up to 80% of the copper available on the market. So they're already in plans to expand this sort of model where they're able to be a bank that on the one hand can trade on insider information gained from their warehouse, which they alone control how fast or slow they are delivered.
Right, if Teddy Roosevelt were alive today, he'd break these trusts up. That's the problem with the American economy today, is you've got these trusts. Vertically integrated, market manipulating, inside colluding bankers and politicians who are creating this enormous wealth gap. America is now the 27th in terms of where that middle class is to other countries around the world. It was number 1 of the richest middle class in the world. Now it's number 27, and it's dropping like a stone. And that can only lead to one outcome.
Max, just to be clear, Goldman Sachs just said they are market making.
Oh yeah, they're just market making. Okay, well, Stacey Herbert, thanks so much again for explaining this all here on the Keiser Report.
Thank you, Max.
Stay tuned for the second half, a whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Mitch Firestein, author of Planet Ponzi. Here it is. Here's the book. Here it is. Get it. All right, Mitch Firestein, welcome to the Keiser Report again.
Chuffed to be here, Max.
Oh, you're just saying that because Jan Scoyles used that word, and everyone loves her, and you're just trying to be lovable like Jan Scoyles. I think it's going to work.
Oh.
All right, so here's today's Financial Times. The Bank of England capital Taliban choking fragile recovery, warns Vince Cable. So Vince Cable is calling outgoing Mervyn King a financial terrorist. He's comparing him to the Taliban because he's insisting that banks hold on to a minimum capital requirement reserve on their balance sheets. Now, you're the author of Planet Ponzi, right? What's going on here? Isn't this idea that they need a certain capital requirement, or otherwise you just end up with just this huge Ponzi scheme, right?
But we've entered a world of fantasy. So basically what we have is debt, credit, and leverage that actually runs the markets now. So the QE, global QE, is basically a giant roach motel. There's a big welcome sign outside, you can come in, but you can't exit. So there's no exit strategy to get out, and it's all perpetuated by excessive leverage. And to keep this scheme going, you need to pump in $85 billion a month.
Okay, but to keep that scheme going, part and parcel with that is to ensure that banks are not required to keep minimum capital requirements. In other words, get that leverage ratio expanding, right?
That's right. Because if you look at the balance sheet that Ben Bernanke has, it's probably double what Lehman Brothers was when they went bust. So Lehman Brothers was at a leverage ratio of about 30 to 1. The Fed is probably at least 60, maybe 90 to 1 with what they have on the balance sheet. So it's just going So the issue, when the markets had the little taper tantrum I guess, 2 weeks ago, and you saw yields rise, I don't know, 100 basis points fairly quickly. They all panicked because they said, oh my God, we just lost 200 billion. And then they said, oh, we know what it feels like to be a hedge fund now because we can't control this. And I think that what they think is that they can control interest rates, which is a big mistake. So now what they've got to do is try to figure something out. If you notice, there's a massive scramble and PR campaign going on to replace the Fed chairman who said that, didn't even say he's leaving yet. So is that a hint to the market that he's been expelled by the administration?
All right, we'll get to that in a second. You're talking about, possibility of Larry Summers coming in, et cetera. But I want to stick on this idea for a second of minimum capital requirements and what the central bank is saying. Because here in the UK now, we've got Mark Carney. He comes in from Bank of Canada. He is going to be a money printer. We know that from the onset. He hasn't said it officially yet. But he is mentioned in this article as somebody who the chancellor, that being George Osborne, can relate to and get to relax the minimum capital requirements and to support schemes like Help to Buy, Fund to Lend, and all these other programs that are meant to increase the leverage. Because they believe that increased leverage and the increase in asset prices that come with that increase in leverage is growth. Even though the underlying economy is shrinking, jobs are shrinking, wages are shrinking, they still see growth because they're inflating a Ponzi scheme. Because Bernie Madoff, just because he had a huge fund that went up every month because he was engaged in a Ponzi scheme, he said he was growing. George Osborne is saying is growing. In fact, they should be raising interest rates, correct, to deflate this nightmare Ponzi scheme, because as you point out, at some point it ends and there's a crash.
You can't spend your way out of debt with borrowed money. So you've got to compare it to your revenues. And when you're spending 4 times what you make, that's not in my world, that's not a sustainable formula for economic growth in an economy. So what grows an economy? CapEx and savings. Do we have any of that? No. This is a debt-fueled faux recovery, because if you look at where GDP is globally, I mean, it's nowhere. It's flat to down. And you look at the stock markets, everybody says, oh, we beat earnings. But if you look at revenues, the revenues have declined or they're flat. So the revenue numbers are what you really have to look at, because numbers never lie. But central bankers, politicians, lawyers, and mainstream media,
which way
is slanted.
Is debt in the UK, which way is it going up?
Well, we have a chart. We have a chart of the debt in the UK.
Oh, you do it? Where is it?
Actually,
is it on the screen? Let's put it on the screen.
I think it will be on the screen.
Okay.
You can see it. You start in the left-hand quadrant going, it just goes something like this. So,
right.
I mean, that's a parabolic move like we saw in Apple stock, a parabolic move straight to $700. Every parabolic move in trading, in the history of trading, ends badly. Because when you have an excessive move to the upside, eventually you get mean reversion back down to the norm.
Okay,
which
is interest due on this debt?
That's the problem as well, because we've got a zero boundary to the downside. So if you go back to the 1980s, basically what's happened with interest rates, they've come straight down in a straight line, but you've got a zero boundary to the downside. But while interest rates came down, they've amassed tons and tons and tons of debt.
Okay.
And specifically what's happened with the Fed, basically, what they did, they used to control interest rates by manipulating or changing the discount rate. As you know, that's disappeared. Since 1979, the discount rate has been lowered and raised. And you could see the desperation in 2008 when they came in something like 11 times and cut by 75 basis points, proportionally the biggest cuts they ever made. They said, this isn't working, so we're going to have to try something else. And that's when they tried buying all the bonds and buying all the mortgage securities and creating a $4 trillion Roach Motel that there's no exit strategy for. They just can't get out of now.
How come they say we're not monetizing our debt, even though quantitative easing means they're monetizing debt?
Well, do you think that the government is being honest about everything that's going on? You have to ask yourself
they use the
that,
primary
right?
dealers as intermediaries. They're saying there's not we're not monetizing the debt. The primary dealers are monetizing the debt. They're not saying.
But there's 21 primary dealers, right? And MF Global was one of them. So we also can get into a discussion what happened to John Corzine. He just rolled off the page, and with at one point he went into the sunset, slowly into the sunset, with the 1.6 billion in customer funds, and that just got rolled off, and nobody did anything about it.
So now banks make money how? By creating debt.
That's right.
Okay, so the banks have an incentive to create a huge amount of debt. The amount of debt in the UK is now hitting record amounts because debts are being created by banks. That's their business model, to create debts. The UK government, to hold back the debt creation of the banks, which is their mandate, like a cancer, they can't stop themselves. That's what they wake up thinking about. That's what they do all day long, is create more debt. They need to be curtailed because that debt service is eventually going to overtake all the income in the UK, And the only way to stop it is to regulate or raise interest rates or to somehow clamp down on this monster of this banking sector. But that's not happening. And so you have this extraordinary situation where the debt in the UK and around the world is exploding.
Right, and you have asset bubbles being created off the back of that, which is what happens. And you need to control that, and they're not controlling it. But if you look at M2, in the United States...
Which is what? Explain the M2 for the people.
It's just money supply, basically. And so what's happened in the US, you can see the numbers have gone up because they've been printing all this money. But in Europe, and the banks in the United States largely have deleveraged to an extent, so they don't have as much exposure as Europe and the UK. Here, it's just they've deleveraged nothing, and you still have the same old insolvent crew out there. So eventually, you're going to hit the wall, probably after Merkel's re-election. I don't know what things are waiting for, but Italy is on the brink. You've got 60% youth unemployment in Spain, in Greece, and you've got 3 trillion euros of debt that needs to be rescheduled in Italy. So I don't know how they're going to pay it. And we're going to reach a point where it freezes again and it won't work. And that's coming. It's coming. And that's when you're going to see gold take off quite a bit and go much higher.
Okay, well, you mentioned gold, so I want to talk about gold, and we haven't talked about Larry Summers yet, but let's talk about commodities for a second, because Goldman Sachs is now involved in another scandal. I don't know what number scandal this is. They've got to be involved in more than 50 major frauds in the last 10 years. That, you know, going back 20 or 30 years would have put all of them in jail many, many times over. But they've changed the laws to make fraud legal.
They're too big to prosecute. You didn't see that statute.
Right, exactly.
Okay.
But so the latest Goldman Sachs scandal in the aluminum markets. Okay, they say they're just acting as market makers with this scandal where they're in Detroit, they've got warehouses full of aluminum. Delivery times went from a few weeks to 18 months. They're shuttling it back and forth in the warehouse to create more fees for themselves. And they're adding about a penny to various costs of all the aluminum products out there, $12 to a car, a fraction of a penny to a soda can. And the New York Times says, well, it's just peanuts. We shouldn't care about this. What are your thoughts?
It's like 3-card Monte. Watch the red. You know, when the cards are shuffled around and shuffled around.
But so, that's fraud, though. They're committing fraud. Well, aren't they? Yes or no?
You know, I'm not a regulator. If I was a regulator, then I would go in and take a look at what they did.
Cost to
if you're making the price artificially inflated, then yes, you could say you're manipulating the price, and you're doing it in a concerted effort when people are doing it together and decide to manipulate the prices higher. What's more concerning to me, and what should be more concerning to the viewers and to everybody, is people keep letting the same stuff happen. Like, the definition of insanity is, you know, repeating the same thing and expecting to get a different result. Mary Shapiro, who was the head of the SEC, left, and as a parting gift, like you get on the television show, I'm waiting for mine, by the way, I guess it's gold bullion, so gave JP Morgan and Goldman Sachs the right to control 80% of the physical copper markets. This was signed off on in December. Now that's extremely troubling, because that means that they'll have basically a monopoly on the copper market, which is probably one of the biggest industrial metals on the planet that's necessary for everything. So does there need to be an investigation? Yes, there needs to be an unbiased investigation into this warehouse scandal, because it's a gigantic scandal.
Well, Stacey Herbert made the point that 2 commodities in the world are sacrosanct to a degree, copper and wheat, that they're both very fundamental to the way the global economy works, and that governments have been protective of these 2 commodities in the end, because they realize that if they let a Goldman Sachs or JP Morgan into manipulating copper market, or they let Monsanto into manipulating the wheat market, the possibility of revolution and social uprising and the collapse of social cohesion, it raises exponentially. But now they've finally broken down. So over the years of Goldman Sachs just picking at the regulations and putting their own people into place so that they have their own people running the Fed, their own people running the Treasury, their own people in Congress, their own people in the Senate. After years and years, they're finally at the point now where it's been a complete coup d'etat. Has there been a coup d'etat in America? From the bankers have completely taken over now, and we're just running amok and creating the conditions for mass hysteria.
I think what you've got going on is a groupthink that's very dangerous, because you get the same people with the same ideas. Because, you know, you've got, in the form of Mario Draghi, who was ex-Goldman running the ECB.
Oh, ex-Goldman. Okay.
Right, and you've got the head of the FOMC in New York is a guy named Bill Dudley, who's also ex-Goldman.
Ex-Goldman. Gary Gensler, CFTC.
Gary Gensler, ex-Goldman. Mark Carney, ex-Goldman, who's the head of the Bank of England. So you've got all these coincidences, and Mario Monti, of course, who used to be the head of Italy.
They
and
might,
is still
meanwhile, say
in
all
the
these
shadows.
people running all these markets, running all these countries, running all these regulatory agencies, while the same companies buying up rights to all the commodities. Why is that not a dangerous monopoly position? Why isn't that like Soviet Union? Why isn't Lloyd Blankfein the Brezhnev of Wall Street?
The big issue is the debt. Right? The debt has spiraled out of control. So if you compare QE to the Titanic, a voyage on the Titanic, and actually if you look at the pictures of the captain of the Titanic, they look like Ben Bernanke with the same beard. Okay? So what are they going to do? You've got to resolve the debt issue. People were wearing life jackets on the deck of the Titanic while the band was playing, saying, I don't understand why we're wearing these life jackets out here. It's the same thing. The problem is the hole in the boat and you're sinking. The problem is the debt. Nobody's addressing the debt, Max.
Least of all, George Osborne. We got to go. We're out of time. Okay, this is the book, Planet Ponzi. All right, thanks for being on the Keiser Report.
Thanks for having me here again, Max.
All right, that's all the time we have for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Mitch Firestein of PlanetPonzi.com. If you'd like to get in touch, tweet us at Keiser Report. Until next time, Max Keiser saying bye, y'all.